everyone. Thank you very much for joining us in the first edition of the Crypto Hot Seat, CEO edition. Where are we now and where are we headed? Today we have Sascha Ragoonwala, CEO of Coinbase Germany, Stephen Stonberg, CEO of Bittrex Global, Jason Butcher, CEO of CoinPayments, and Daniel Heyman, CEO of Palm NFT. Consensys take on the NFT mania. So we're very happy to have you all here. We have a lot to discuss. So if you don't mind, let's get right to it. I'm going to try to have everyone having equal screen time. So I'm going to be directing the questions toward one of you in the beginning. But of course, whoever feels like intervening, like saying something, just feel free to pop up. And well, first of all, the topic of the week. I know this is coming live on the 19th, which is 9 week, but I don't think things are going to change that much in this regard. And we're witnessing quite a turn in the regulatory tides, particularly in the USA, right? And what I'm personally very surprised to see is that there has been a lot of resilience from the crypto markets. While we see that some laws that could have broken the crypto industry, could have broken it in 2 years ago, 3 years ago, now, at least on the prices front, we see that things seem to remain mildly undisturbed. So I'm gonna point to Stephen right now to ask you, why do you think this is? Why do you think we're witnessing this?
I mean, first of all, the US is only 350 million people. So, I mean, there's a very big world out there. So I think even if they do some crazy stuff in the US, who cares? And I would say, that's going to affect the US market as an American, dual citizen, British as well, but I don't like that. But I'm running the non-US part of Bittrex, which is Bittrex Global. So we are regulated in the EU and the EEA and Liechtenstein, and we also have a Bermuda license. The EU seems to have sensible legislation vis-a-vis the US, and I think you're just going to see the industry, if they do silly things, and it's unclear what they're going to do. Frankly, right now it's just noise. But you'll see the industry move completely offshore, and which you saw in 2017, a lot of developers left as well. So I just think that this is not specific to crypto. Whenever you have silly regulation, companies and people vote with their feet. It's a big world out there, and crypto is very global. I think the other thing I would say is we do like, and just in general, I think the industry has been very unregulated, has been unclear. So I think this is coming at a time when there's already sort of regulatory pressure globally on some of the players that have decided just because it's on a blockchain, it's not regulated. That's not true. Like the laws apply just because you have a new settlement system. So I think it's very complicated what's going on. So you have a regulator in a country that seems to not have its act together at a time when global regulation seems to be getting its act together.
If no one's popping right back, I'm gonna point to Jason Butcher here, which is like the one who seems like he wants to speak the most.
I mean, I agree with Stephen that I was on a board meeting earlier with the Emerging Payments Association, which we're helping the Central Bank of Britain basically come up with concepts, ideas around their central bank CBDC issuance and the regulatory elements of that. And part of it has to do is, how do they regulate CBDCs? How do they regulate stablecoins? How do they regulate crypto, blockchain, etc.? And I think there's countries and markets that are far more ahead than the US. At the same time, the US aren't really behind. They're just doing the same thing as they do as everything is. How do they control the global market and the global dominance with their rules and regulations? And I think a part of the conversation I was having earlier is pretty clear. You're going to have different rules and regulations in different markets, and you're going to have the interoperability situation is always going to come up with how does one market work with another market. And it's all going to come down to the service suppliers. We have this VASP regulation, the FATF guidelines as to how do we operate. Well, I go back to Canada, 2014, they came out and said very clearly, here is your Msb rules and regulations. Follow these as your guide if you're providing something in the crypto space. We're a payments company, so we support merchants with accepting crypto as a form of trade or a form of value exchange between a buyer and a seller. I'm not in the space of investing in crypto, but the guidelines are pretty much there. If you're an investor, follow the guidelines of investor. If you're providing investment or trading, follow that within the market that you're providing services. So I'm a believer in support regulation. I believe that having all of us as operators, having some guidelines and directives to follow help us grow. And I believe we've grown 300-400 times in a percentage based on regulation, based on understanding, clarity. If we were still in the space of who knows, we don't know, we're going to break the law, we're going to do this, probably not going to see the same growth. And I think adoption is happening because people feel safer, they feel more comfortable, they have an understanding.
Perhaps I can echo that because it just went through a regulatory process and we just got the first ever BaFin crypto custody license. And so Germany, for instance, I think what they did quite well is to blend existing financial services regulation and adopt it to the crypto world. So it doesn't feel overly heavy. And I think just to emphasize a particular point, I believe if crypto wants to, grow and become ever more stable as an asset class, obviously we need to see much more institutional adoption. And regulation is clearly a prerequisite for that. Many of the asset owners, asset managers cannot invest into unregulated markets. So for that very reason alone, certain regulatory regime, I think, is generally required and welcome. Obviously, it should not undercut the industry because I think the industry as such has an enormous innovation potential, which would benefit, which I'm sure we'll touch on that throughout the discussion, which has an enormous economic potential, growth potential. And I think it's very timely to orchestrate, if you will, the digital asset world, and hopefully the regulators, find good ways not to contain innovation, while providing the necessary framework for broader adoption.
But that's their specialty, squashing innovation, isn't it? That's let's hope. One only hopes that they can be rational this time, right?
Can we hear from Dan on this regard? Because I reckon you're going to have a pretty interesting take given all the efforts that you guys do towards decentralization.
Yeah, absolutely. So first, I come at this with a very different lens. I'm not looking at crypto as an asset class per se. I'm trying to figure out what people can do with NFTs in a way that's productive. And so for me, US regulation is a really scary proposition because so much of our strategy for the next few years is extending existing IP, creative brands, creative stories, universes into the NFT space and sort of adding NFTs as part of a proper multimedia universe with the biggest brands you can imagine. And if there's regulatory risk from that perspective, the brands which are all US based, are never going to engage in a meaningful way. And so I'm a bit nervous. I think, I forget who said it, that it's unclear what will happen. And I don't think the legislation in its current form will make it through, or at least that's what I'm being told by people who know 100 times more about this stuff than I do. But if it does pass in this form, it's not just the buyer base or collector base that we lose. It's the biggest brands in the world, the biggest IP in the world, the biggest stories in the world, from engaging with an entire new distribution channel and new technology to extend their content.
I might just bounce this back to yourself because Stephen said a very interesting phrase that was squeezing innovation. What do you feel that, and I'm not myself saying that regulations are a way of squeezing innovation, but I do understand that certain regulations could be a way to do so. But so what do you think companies and general initiatives can do to surpass this or to get away from initiatives that actually try to squeeze innovation out of the environment? And I was just bouncing this one to you then.
Yeah, so I mean, there are many bolder people in the crypto space than I am who have gone around regulation and have sort of pursued the regulatory arbitrage approach. We have tried to be as conservative as possible in our regulatory approach because we want to partner with the largest brands in the world. And, regulatory arbitrage isn't going to work for them, so it's not our strategy. I think it's already been said a couple of times. Poor regulation has the ability to squash innovation. Clear regulation and supportive regulation actually accelerates innovation because it helps companies know how to engage, what the guidelines are, and what to do. And so Regulation per se, like technology in many ways, is neither good nor bad. It's how it's applied and how it's constructed. And so what makes, I think, all of us apprehensive is the current regulation is certainly poorly constructed and very restrictive as it's proposed. But there are lots of smart people with really thoughtful approaches to regulation that are currently lobbying in DC, that are currently in touch with senators and representatives and trying to position the regulation in a much more constructive fashion.
Stephen looks like he wants to say something. Guys, don't be afraid of interrupting each other.
I think like there's nothing you can do. It's out of your control. I think the industry is gonna the industry is moving forward. Again, planet Earth has, population-wise, US is pretty small percentage-wise. I mean, yes, economy huge, but still, the rest of the world will just get on with it. And then I think that just exacerbates the pressure of what Dan was saying. Eventually they'll come around. It's just not going to be a straight linear path, unfortunately. I think it tends to kind of go a bit around the wrong way.
In this sense, one of the arguments that I read the most during this week, it was that people felt like, similarly to what happened with Facebook and with Mark Zuckerberg's audience, that there was a general feeling of unease of how uneducated the regulators in the US were. And moving away from the US, because as you said, the world is big enough to just focus on one nation the whole time. I know that Sascha, just undergo, you just went through the whole process of becoming regulated in Germany. So how did you find the regulator's perspective from an education sense in there?
Very open-minded, I should say. They knew exactly that this is an area which they don't fully understand. So they obviously had the usual arsenal of, financial or particularly risk management regimes, if you will, to at least find a positive, constructive route. How to apply them to the crypto space. And I must say that, even when it comes to capital requirements, I think everything that we discussed was, very reasonable, very constructive. And, as we came in first, I think we probably also did something right. And I think we purposely went the extra route to explain ourselves, explain the industry, make sure they understand. Obviously they come from a very different space, a very different angle. They're used to, traditional securities. They just went for the MiFID exercise, so that probably shaped their thinking a little bit. But I found them, extremely constructive and open. And it's not just BaFin in our case, also Bundesbank, the German central bank, that also took a vivid interest. And so far so good. I can only speak highly of them.
I would just build on that because we're obviously in Liechtenstein, which is very close to Germany. And I know they moved a bit quicker. I mean, the smaller countries tend to be a bit more nimble. Again, Liechtenstein's a AAA rated EEA member state. We're not in the Seychelles. Like there's a real country and a real regulator, and it's MiFID too. I mean, the Liechtenstein bank regulator is an EU bank regulator. So we went there because they set up and passed a blockchain act. We are the first exchange to be supervised under the blockchain act. So, I think that's, again, and I know that the guys from Liechtenstein were up at BaFin explaining to them, and I think they actually copied a lot of some of the stuff in the Liechtenstein blockchain act because it came so early. It was 2 and 3 years ago. So, I think that, good regulation, building on what others have said and Dan said, that's what we want. We want to be regulated. We want to be supervised, but we want it to be rational and make sense. And I think that's what you're finding in Europe. And with this MiCA legislation that's coming, which is great, if you're supervised in an EEA or EU member state by a bank regulator, you'll be able to then officially passport throughout the EU, not just do sort of reverse solicitation. So I think it's only going to get better.
The only thing I should say is that hopefully it's not just the regulator, but also the tax regimes that somewhat harmonize. And there is a proposal out there in Germany right now, and you can read it in a way that, any asset you stake would be, would basically be locked in for 10 years from a tax perspective, which certainly is not positive. It's certainly not the last word. I'm just saying that it's not just the financial regulatory regime, it's also the tax regime that needs to kind of understand what crypto really is all about.
And I'd say from my standpoint is that, since we started our business in 2013, we've gone through sort of an educational training process with everything from regulators to investigators to, even the local cyber police to educating even what blockchain was or how to deal with things. We've educated the likes of the Deloittes and the guys who are the auditors who are, really when the governments are looking at guidelines of regulations and legal, they go to lawyers and they go to auditors to give them a framework and direction. And I think it's ultimately our responsibility, the people that are building this economy, to educate and provide guidance and directive. There is some responsibility in our world that we should be providing that information and education and guidance and supporting the regulators, because they only know what they know, right? And they're not actively involved in our space. I've taken this stance in some cases to actually be on boards and advisory spaces to support with information that these guys don't know, nor do the legal minds that are there. They don't know. They're not actively involved in the payment space. They're not actively involved in crypto. They're taking information that they hear and they see and they read. But ultimately, I think it's our responsibility to support these groups and organizations to guide and to create regulatory frameworks that we can work within, whether it's innovation or technology or it's following their financials construct, right? You have crypto as an investment. You have we all saw the ICO days. We saw abuse of investments, right? And or marketing. We saw different strategies within crypto market as a speculation space. We know that also happens in the stock markets, right? The OTC market in the US is ripe with challenge and it's fully regulated. But is it better or is it worse? The regulation doesn't make it better or worse. Eventually, people are still abuse it. But I think crypto today is changing in many ways, much more adoption than we had 3 years ago. And the regulators, governments, the central banks are all catching up to where it is. I think they're going to be always in a catch-up phase, just like innovation is. So, I think it's our responsibility to educate and provide feedback and support with where we want to see it go, not be dependent on what's going to happen.
And to add to that point, because we started this discussion talking about the resilience of the crypto markets in tough times, at least when it comes to certain things. And we're talking about educating regulators and how, of course, like Jason said, they're not going out of their way to educate themselves. So it should be upon our industry to educate them. There is, of course, the other side of the coin, that is that whenever people see that a celebrity has a huge impact on the prices in the market and in the way the markets move, it can be scary for certain people. It can look like the Wild West for certain people. So, and of course, we're talking Elon Musk here. It is no secret to anyone. So,
ironically, he got in trouble for doing the same thing in the securities market. So he got censured for that behavior. So I go back to Jason's point. I mean, that's market manipulation. It's just not called that yet in crypto markets, but that's clearly, I think he's no friend of people in crypto right now. Everyone's sort of, there was at the Bitcoin Miami conference, they had a big billboard outside, like "stick to space, Elon" or something. So it was, I think that's kind of, in a nice way, I think summarizes the sentiment towards him. But I mean, what he's doing would be considered market manipulation in regulated markets. So ironic that he's somebody who got into big trouble for that already, right?
Ironically, so. No, go ahead. Jason,
I just think on that front, I can remember the day that he was on Saturday Night Live. Every single person that was holding Dogecoin was expecting Doge to go to the market because the speculation was, oh, Elon Musk is going to tell everybody what to do. What happened to Doge? It went down. It didn't go up, right? And there is definitely influences from media channels, guys like Elon, that will affect certain markets. And there is definitely a market manipulation. But, the market manipulation is happening in the financial markets every day by major players. The JP Morgans of the world can make a slight shift and can affect the market, right? In traditional financial markets. So can the globe. The usage, the adoption of crypto is demonstrating that this isn't going anywhere, right? So this is going positive, and more people are moving towards it, which is why central banks, governments, groups are pushing now towards, their central bank digital currency, which, us in the crypto space, I'd say decentralization has some concerns about the impact of what central bank digital currencies will mean. But I believe that, we're moving forward, sort of like the Nokia days where they said smartphones were never going to happen, right? Well, guess what? They were wrong. Governments, if they said, oh, this isn't going to happen, we're going to stop it, they're wrong. They tried to stop the internet in the 90s. It didn't happen. It's not going to happen.
They sound like Barnes and Noble, but the online books won't ever take off.
Exactly.
Yeah.
And I want to, sorry, Sascha, go ahead.
Now, perhaps I want to echo a little bit, what was said before, also that, when you remember the Euro that was just played in Ronaldo, just moved Coca-Cola away, also the market moved a little bit. So it's something you see anyways. Actually, this was a good observation by a colleague of mine. Generally, I think the crypto is such a new industry. Crypto is an industry without fundamental data. So you don't have earnings that you can look at. Crypto is a decentralized economy, so you don't have an Alan Greenspan that makes the news. So I think we have to learn what really moves markets, and we probably as an industry have a responsibility to explain a little better how the value add really works. Why is something appreciating, and why not, right? And there's no research out there. All the arsenal you usually have in financial markets simply doesn't exist, right? There is no key index, there are no ratings, all the arsenal is missing. So I think we have to build that over time. And it's, exactly what Jason said, it's up to us to communicate.
I would ask Dan then, because another factor that put a lot of attention in the crypto industry lately, and of course that also brought a lot of celebrities on board, which are of course influencers and move the tides by themselves, was NFTs very recently. So how do you feel the world can adequate to having so many new people jumping into the crypto space? And I mean, if you want to tie this into the previous discussion, of course, go ahead.
I mean, in terms of the previous discussion on market manipulation and prices, the traditional art world, which is probably the closest analog to a lot of the crypto art world, is rife with market manipulation, and so too is the crypto art world. I mean, I think a lot of my friends are obviously asking me, should I invest in NFTs? And my answer is buyer beware, right? There's people with deeper pockets and smarter approaches going after the same dollar appreciation you're going after. That said, what's nice about NFTs is a lot of people are engaging with them outside of the appreciative and investment angle. Like some people are just engaging with them for the gaming aspect or the collectible aspect, or once I figure out how to set up my Samsung frame, I'll be able to display some nice NFTs and show off to the world. And so there's that piece of the identity expansion. But it was, it all comes back to what Sascha was saying, which is there is no standard for how to value crypto assets of any kind at the moment. And so, the closest standard I've seen in the DeFi space is total value locked, and like why that is the indication or driver of DeFi protocol value is still a bit opaque to me. It's not clear that that's the right measure, and yet it's kind of the de facto that a lot of people use. And so until we have a lot more historical data and a lot more broader adoption and the benefits of hindsight to see what worked and what didn't work, it's going to be a fairly volatile market compared to the asset classes that have that history and have that hindsight. In terms of bringing sort of celebrities in and new appetite, I've been in the crypto space for not as long as some people here, but for 4 years in Ethereum, building core blockchain protocols. And the question I think I most often got asked is like, what in the real world is this stuff actually good for? And I think there's a lot of very, very true and valuable, theoretical arguments. There's some very true and valuable benefits around payments and things like that. But at least for the last 2 years in the Ethereum ecosystem, we were seeing the adoption largely driven by DeFi. And DeFi is bringing a lot of innovation to the table, but I think there's a somewhat legitimate criticism of it that it's fairly circular in terms of an ecosystem. You're, collateralizing tokens to buy other tokens. You're taking a loan to buy other tokens. You're creating synthetics to buy other tokens, and it wasn't really touching outside this economy. And what's exciting about NFT is celebrities coming into the space, artists coming into the space, brands coming into the space, is they're bringing things that touch the outside economy, that interact value outside of this closed ecosystem very directly. And so for me, I think it's the most bullish signal for the ecosystem. Of course, I would say that I'm very biased, like that's my world. So, I take that with a grain of salt, or maybe you all should as well. But media is, I think, the number one way for this technology to cross the chasm and to pour in hundreds and thousands of new users very quickly into the space. And once I think they get the bug, they'll start experimenting with other use cases, other value stores, other things to do in crypto. And that's only a good signal for all of us.
Okay, you touched on the circular economy and on the Ethereum ecosystem in general. And I think, well, that's a proposal that's come out of like the top leadership, quote unquote, of Ethereum, such as Vitalik and Kevin Nowacki, etc. They very much drive across the point that DeFi should, or the Ethereum ecosystem should not be limited to DeFi and to what they call a decentralized casino. So I would point, I don't know, whoever wants to raise their hand to talk about this, please feel free to do so. But what else do you see being adopted from now on, or what immediate use cases do you guys see for the Ethereum ecosystem and from decentralized models that we can implement in the real world to drive across this proposition? Okay, I'm just going to say Sascha.
Well, obviously it's the question, what's next? What's the next frontier, if you will, right? And if you ask me what is really exciting about crypto or tokens as such, is they can, they are both an asset class, a genuine asset class, so they represent, like an NFT is a true digital asset, but they also are meta asset class, so they can represent anything that you can find in the real world. So I think the opportunities are huge. The one thing I would look for, perhaps I'm naive, but it would be great if all the public registries went onto the blockchain, right? This would be my perfect dream, because this would unlock so many new applications, smart contracts that could really be of service to the people. I think this would be a monumental identity creation project for the European Union, right? If there was a Euro block, or if all the European registers went onto the blockchain, and citizens would be empowered, right? This would be, my perfect storm. Now, on the short term, I would imagine, I'm sure that the DeFi space will continue to evolve. I think the point is well taken. How to step outside of the crypto space itself, right? I think what's fascinating about DeFi is that certain industries are basically, well, they can look into the mirror and say, well, an insurance is not much more than some lines of code, effectively, right? So that perhaps there are hybrid models that could evolve, right? I guess the role of stable coins will be pivotal, right? Because they are the natural bridge, and I could see that certain financial services are, if you will, substituted in a way, or maybe even consumers rush into, say, a DeFi-based insurance because they don't want to pay the premiums anymore, and they use stablecoins for that. Now, obviously, all of that needs to be transparent, robust, et cetera, et cetera. But I think that's our challenge as an industry, to make it as accessible as possible.
Stephen?
Sure. I mean, I step back, I look at, there's so much jargon in this industry, and for people who don't understand it. I mean, first of all, I think the story is blockchain. Blockchain is a settlement system. Crypto is a use case of blockchain. It's the most popular one now. And then I always start with this 2x2 matrix. There's two kinds of tokens: a fungible token, which is like a dollar bill, you don't care which one, and an NFT, which is a non-fungible token. You care which one you own. But I think the noise and what Dan was talking about, and you were mentioning, the main use case right now is digital art into an NFT. And that's what, and I agree, like buyer beware, but that's just scratching the surface. And then you have two other kinds of, so every token is either an FT or an NFT, and it's either a utility token or a security token. And a lot of NFTs are going to be security tokens, because by definition, they're real world assets. So I think you can securitize or put everything on planet Earth can go on the blockchain, what Sascha said. And we're already trading security tokens. We have a license in Bermuda. We're offering those on a limited basis where right now they're just unsolicited ETFs. So digital Tesla, so we've created our own, Tesla share that people can buy, piss off Elon, but you can buy a fractional share of Tesla 24/7 using crypto, and it's a digital token. It's representing a share.
So, Jason, would you add to that?
Yeah, I mean, I think this is a very speculative question, right? I mean, where are we going? What are we doing? I have a lot of personal feelings about the whole terminology of blockchain to crypto to cryptocurrencies to investment and speculation. I mean, originally I saw crypto as a fundamental means of allowing crowdfunding, the idea of using your contacts, your resources, your team to go out to a marketplace, raise some capital, but actually demonstrate that you had support around your idea and concept, right? Was really my vision of where the explosion of the ICO market was, right? The idea of how do I go to the community and verify and validate my idea and concept. And crypto was sort of that first initial stage in that. That's how I looked at it. The next stage was, well, how do you relate crypto to the barter industry, right? You're using a digital record of measurement and an exchange of value, saying, hey, I want to buy or trade something with you. I have this asset. You're accepting that asset now as the exchange of value. Exactly what barter and the barter systems that were out there did, except they were recording that exchange of value on a Excel document. The blockchain enabled us to be able to demonstrate that record of measurement was visible and industry. You could verify in right away. Today, you have things like NFTs. You have NFTs that are representing physical assets. You have NFTs that are representing digital assets. You have the gaming industry, the art, the music. I'm involved with a group that's doing it based on funding a movie. So you get an NFT that's demonstrated your share of that movie. Whether it makes money or not, you were participating in funding the development of that project. I think we could speculate all day long. Where are we going to go? What are we going to do? And the fact is, most things are going to be recorded on a blockchain. Not everything needs to be, though. I live in a little island. We have 60,000 people here. Do we need crypto and blockchain in an island to demonstrate our exchange of value between each other? No. Right? But globally, there's the areas of distribution, the areas of contract law, as Stephen and Sascha mentioned, you have real estate, you have identification, digital IDs, the exchange of our passports and our information that's freely distributed all over the world today because somebody said, oh, share your KYC because you have to do KYC. Who now has my KYC? Those elements I think are going to be fundamental in the next phases of the blockchain / crypto industry. And regulation will help either stimulate it or stifle it. I think it's going to support, we as a group have to support the innovation and continuation. And if there's a speculation around that, I see a tremendous future and growth with the usage of both blockchain and crypto in all of our lives.
And since all of you mentioned NFTs at some point of your answer, can we hear back from you, Dan, on the implementations of NFTs that you're looking for? That you are most excited about in the near future.
In the near future, NFTs, like most of the things we're working on, it's a technology enabler, and it really depends on which assets and IP it works with. I usually divide the IP into digitally native IP and non-digitally native IP is sort of the simplest construct. When I was growing up, I bought CDs and I had posters up on my wall. And when my friends came over to my place, I would show off my CDs, like an extension of what I cared about, my identity. And for the things I really cared about, they'd be up on the posters on the wall, and I'd really show those off, and they were part of me. So I owned a little piece of that creative effort, it was mine and I could show it off as mine. In the last 20 years, the entire creative industry has moved to a streaming and social media distribution model. There's lots of good that comes with that distribution model, but the downside is there's no ownership from a fan's perspective, and it's very hard for fans to express identity through their creators today. And I think what we'll see in the next few years is a huge proliferation of NFTs relating to creators of all kinds, movie universes, digital artists, musicians, and so forth. And fans, particularly young fans, will show off their NFT collection in the same way I used to show off my CD collection to my friends. And it's not like, on one hand, I've heard a criticism of that logic that's simple and meaningless. On the other hand, I think nothing is more powerful than expressions of identity in terms of changing the world and changing the way we interact. And so I think that's huge. I think as part of that, we're going to see every single traditional media class extend into the NFT world. And so in the same way that we saw, I don't know, choose your favorite movie franchise, let's just call it Avengers, go from comic books to movies to now streaming TV shows to video games. Like every new distribution method and means of engagement these franchises have picked up and added in to their universe, we will see them do the same with NFTs in the next couple of years. And that alone, those two elements alone are huge. And then, you know, once that happens, we're going to be developing a toolkit for NFTs that can extend well beyond just media distribution and media engagement. And that's where some of the ideas around real estate, ticketing, general IP, registries that we've heard here, I think could follow suit once the technology has become easier to use and distribute by the media use cases.
And
I agree with you, Dan. I agree with you totally, because I have a 12-year-old son. He lives in a virtual world, and what do they want today? They want their special clothing, their special car, their special things, because it is a sense of belonging, or it's almost a sense of ownership, right? Like I had hockey cards when I was a kid, right? And I had different little tools or different little things that were mine. I felt that they were I identified with them. And I think today the meta universe area is, we don't even think we can even fathom where it's going to be, really. But in the next 5 to 10 years, I remember Second Life, if you guys ever use Second Life, but Second Life was the first metaverse. And what did you have? You had ownership of property, land, pictures, different things. And why? Because you're like, hey, I got to invest in this stuff, because potentially now today, the technology, things like blockchain, things like NFTs can demonstrate the distribution of value between it too. And the person who created that can also now be paid for the creation of it, where Second Life didn't engage in that level, didn't have that functionality. Today you have that. So the metaverse space is outside of my realm completely. However, I see it with my son. And if you look at anything from 20 years from today, that's where it's going to be.
The other piece on this is community. So it's what you said there, Jason. There are lots of traditional metaverses that don't touch blockchain at all. What blockchain can do to superpower them, supercharge them, is two things. It bootstraps community in a remarkable way and gets that community highly invested in your world, which is the most important thing. And then the second is it provides that true feeling and reality of owning an item. And when you actually own something, you're willing to invest more money into it, but more time and more love and more passion and all these other things.
Yeah, perhaps one observation. I think as we look at the global economy, obviously we are exploiting our resources, our physical resources, already quite a bit. And I think if we want to see growth going forward, it can't be with fossils and physical goods. It has to be with digital goods. In this sense, blockchain, NFTs in particular, will be a key driver of growth and relentless innovation. I think that's a very positive, and that's something that's not, to my mind, not touted enough, right? It's not really communicated well enough, because I think it's a massive valve for innovation that can be unlocked. Smart contracts are more geared towards efficiency, right? Whereas the NFT more geared towards innovation, creativity.
And I mean, Stephen mentioned for a brief moment the land registries as an example of things that can get put on the blockchain and that can take the industry away from only the financial space. And something that I see a lot that I don't think we've moved away from as much as we should have, is that people tend to equate the blockchain industry and its value with whatever the Bitcoin price is at that moment, which I find quite unfortunate. Someone also mentioned total value locked as a metric that could be worthwhile exploring in general. But I will direct this question to Stephen. How do you think we can decouple our industry a little bit from these unfortunate facts?
Well, I think right now, again, most of the value is in Bitcoin. So, I mean, that is the whale in the room. I think, the industry, we're in such early days of this industry. So I think, over time, again, remember Amazon, the whole value, it was a bookstore. You used a dial-up modem and then it grew into this thing. So I just think that right now blockchain is about the crypto use case, which is mainly Bitcoin and, Ethereum as well. But I think over time, as you start to see other things on the blockchain, and remember, these are digital fungible tokens. Right now we have art that's digital only and NFTs, but again, you'll start to see more use cases like real world assets coming into the blockchain, and then which perhaps will dwarf the size of Bitcoin, and then you won't hear about Bitcoin anymore, or you will, but it just will be one of many. So I think it makes sense that it's it's all about Bitcoin right now, but that's not the end game. That's just the beginning.
Would anyone want to add to that? Jason?
Yeah, perhaps one thing that is also important is, even though the Bitcoin price is volatile, it still is a signal, and it typically it's a signal of attraction. And the more often the price goes up, the more people feel they have to at least engage with crypto as an asset class, right? So it's a first tiny step. And I'm also thinking in terms of, again, I mentioned that before, institutional investors. If institutional investors, go over the hump and commit themselves to the asset class, albeit at a very small level, they're building up the capabilities and they need to build up the research and the understanding of the asset class. And, all of that, I think, helps propel the asset class going forward. Let's not call it an asset class. It's not just an investment, right? It's more than that, but at least the understanding of the space. I think so in this respect, yes, it's not enough of a signal. We need far more information. That's, again, as we said before, it's the responsibility of our industry, I think, to help with that. But I think it's still an attractive signal for many to be drawn to that space.
And I would add to that the fact that many people mention of price as a marketing device, right? Like every time the price makes it to the news, that effectively brings more people into the space. Sorry, Dan, I cut you off in the start of your sentence.
No. I was just going to observe, I think Bitcoin has long dominated the market cap within the broader crypto and blockchain industry, but that percentage of value is steadily decreasing. I'm not an expert on that, but I just pulled it up today. According to CoinMarketCap, it's nearly 2 trillion, and Bitcoin is 872 billion of that, so 45%. That number was probably 70, 80, 90%. Obviously, at one time it was 100%. And we're starting to see that because of the innovation and the new use cases and all the experimentation that's happening. I've always been very deep in the Ethereum ecosystem. It's sort of been my my professional career in the space, and so I'm biased in that regard. But I think I get very frustrated when people think blockchain and crypto or Bitcoin and the price represents the entire ecosystem. And we saw this the last couple of months when the prices of all assets cratered except for NFTs. They dipped a bit, but they were much more resilient in the broader market, which is kind of interesting.
And I would like to do a quick round with you because we also have questions from the audience, and this is something that I really like to get everyone's point of view. If you want to just make it a short phrase, it can be a couple of sentences. But the one question that really interested me came from Reddit, and it was, if you were to wake up in 30 years and see that crypto as a whole failed completely, why do you think that would be? I'm just going to go from the faces I see on the left clockwise. So I'm going to start with Jason.
I would say I'd probably wake up on another planet, to be honest. I don't see that happening. And that's not because I'm in the crypto market. I'm actually in the financial markets, and I'm involved in lots of different businesses as an entrepreneur. But I don't think that that's actually possible. We've surpassed the is this going to work or is this going to happen stage, at least in this planet. So I would most likely in 30 years. If I wake up in 30 years, I would most likely be somewhere else. Okay,
moving now to my right, Stephen.
Yeah, I mean, I agree. There's like no chance. I mean, it's not possible. So this is not a scenario I would give any value to. Zero probability.
Okay, Dan, give me something.
So I think I was, a baby in 1990. But I think when people who were working on the internet then see the internet today, it's probably a bastardization of the form, even though the internet itself was inevitable in its progress. I think the failure mode is corruption or capture of blockchain that prevents it from achieving its full promise and its full potential, rather than the outcome where it doesn't exist at all.
Okay, Sascha.
So I typically, and as earlier other colleagues were saying, superior innovation prevails.
Okay, and to talk CBDCs, I noticed that a couple of you mentioned that topic. I personally haven't made up my mind about CBDCs at all in general. So what do you think people get right, and what do you think people get wrong when it comes to CBDCs, Jason?
I mean, as I mentioned earlier, I am on a board that's helping the UK government with regards to their green paper and guidance on this regulation. And, CBDCs do not necessarily support blockchain or decentralization, right? It is 100% centralization having a CBDC. But technically today, we already live with CBDCs. It's just not on a blockchain. You have all the digital wallets that are out there, not crypto wallets, digital wallets like the Skrills, the PayPals, Visa, MasterCard. They're all digital payments, right? They're already a digital currency. It's just that it's being handled through these various service suppliers that are issuing the currency, and they're issuing based on traditional financial models, such as a bank can lend money based on a percentage of their holdings, right? They're the ones creating their own central or stable coin. It's just not on a blockchain. It's not recorded as it, but technically they're already creating this currency that's out in that space. And it's supposedly stable, but it's not stable. And there's a lot of things like our conversation today came up. Well, what happens with regulations on CBDCs, such as lending? How much is there needing to be 100% back by the loan that's going out? And I suggest, if you go back to the day of the old days where silver was the people's money, kings and queens had gold. In my world, that's Bitcoin. Silver being the currency of people, allowing people to borrow between each other. You didn't go to the bank. You went to the lender down the street that had piles of silver, and they lent the money to you individually. That was decentralization, right? That is what DeFi is today. So DeFi allows for you to go back to the day that you could lend your assets to an individual because you're taking the credit risk. The banks, the regulators, the central banks issuing a CBDC is 100% control of the flow of their own funds. Yeah. The cash today, they don't have any control of. You can freely move millions of dollars in a briefcase around with no AML, no regulation, no licensing, no knowledge of what's happening. CBDCs put it in the hands of the central banks to now be able to track where that money is. Stop it, limit it, put limits and controls on it. So yes, it's going to happen 100%. But is there still going to be choice? There's always going to be choice, right? And people are going to be able to put their funds into other platforms and other systems. CBDCs will be the next phase of the issuance of currency, just like they changed from issuing silver and gold to issuing and distributing coins to then issuing paper money.
Okay, Sascha, anything you would like to add to that?
Yeah, I think it's effectively exactly what Jason said. I think which problem are we trying to solve? It may be the next evolution, but is it really of benefit to the consumer? I still need to be convinced, right? So that's a little bit, and obviously various projects have, depending on who the central bank is, they have different characteristics, but it might be the next evolution of something we know already. I'm not sure it solves the problem because digital payment options exist in abundance already.
Stephen?
I mean, I agree with that. At the end of the day, look, who cares if you have a dollar in your digital wallet, a paper dollar, or now they're going to put it on the blockchain or a euro or sterling? Who cares? I mean, the real issue is irrespective of what form you hold it in, the central banks are just printing this stuff. I mean, it's like Weimar Republic money. So it's going to be worthless. So at the end of the day, does anybody want it, digital or real? No, they want something with a fixed supply, hence the huge demand for Bitcoin, Ethereum, this whole new asset class that didn't exist before, where, at least in Bitcoin, there is a fixed supply. There is no ability to just print. So I think that's the real story. It's not, will you still be allowed to hold a Tether or a USDC? Who cares? They're all just representations or different forms of an underlying asset whose value is tenuous at the moment.
I'm going to push a bit on the fixed supply front. Do you see that could at some point become a negative point for the value world? Because for example, Nassim Taleb in his paper, he very strongly argued against this fixed supply. And at the same time, I see that all the Latin American countries that are trying to adopt Bitcoin as a, I forgot what they call it, but like as a means of payment.
Because it's a currency. It's a legal form of tender, legal tender.
Legal tender.
I'm assuming you're referring to El Salvador. So
I had the word in Spanish in my mind. Sorry, go ahead.
But Carlos, in my side of things on that, on the payment side, as a form of payment, a legal form of tender, is the same as I'll go back to the day what I said earlier. The barter, right? Barter is exchange of value between an individual who accepts the value of what one person giving them and the person who's sending it back to them, right? When it comes to whether it's Bitcoin or it's Ethereum or it's Ripple or whatever the digital currency is, if a transaction is between two individuals, you're using that record of exchange and it's accepted between those two parties, whatever that value is, right? So, and you have different areas. You have in the Bahamas, you have the sand dollar now, the digital currency that is issued and supported by the government there. In Jamaica, you now have a CBDC that's launched in Jamaica to try and create an economy between themselves within their own community, right? And make things more efficient as an exchange of value, because the person who's going to pay $5 for their little fish on the side of the street in Jamaica wants to know that the $5 they're going to get back is $5, right? But you have other markets like the Latin American market where the individuals don't want to hold their currency in a value that's decreasing. They want to have a chance, an opportunity to potentially increase their value. In Brazil, you have 2.5 million crypto investors. They're investing. They're not really using it as an exchange of value. They're investing, right? So I think in different markets, in different areas, and we touched on this a little bit earlier, different markets are going to have different regulations, but they also have different purposes. They have different ideas of where they have. Just like NFTs, I think you buy an NFT, are you buying the NFT to support the NFT project, or are you buying the NFT that represents the specific product? And if you're buying that specific product, you now have ownership. Down the road, if I have a unique picture that it's been burnt, there isn't any other one that's anywhere else, somebody wants to buy it, that's very unique. One of my business partners NFT'd his Lamborghini. He painted it by a famous artist in Dubai. It's like $10 million. He gets to let you, when you buy the NFT, you also buy the Lamborghini. So you have a digital and a physical. So I think there's just changes of different areas, and having countries accept Bitcoin as a standard of accepted currency, you should be able to, as an individual, you should be able to accept any form of payment.
Does this mean, however, that Bitcoin as a payment system, as a peer-to-peer payment system, failed because of this scarcity?
How is it a fail? Today, 80% of all of our business, we transact $500 to $700 million a month. 80% of that is all Bitcoin.
Okay, I see. I mean, I think we kind of cut Stephen in the middle of a point in there. So would you want to add to that,
No,
Stephen?
I mean, I agree with everything Jason said. I mean, look, Bitcoin is a successful payment system. I think, look, it's like there could be other successful payment system. I think having a supply limitation, that's a super plus. I mean, pre-Bitcoin and pre-crypto, people would always complain about inflation, and in the 70s, gold went through the roof because that was it was viewed to have a somewhat fixed supply. So I guess unless an asteroid or something is not, people have more. But I think in the short term, it's and then everyone wants to go back to a gold standard for the very reason they want to get away from this central bank fiat printing, which has only existed since the 70s, right? When we went off the gold standard, and Nixon did that. So and broke Bretton Woods. So I think you have to, again, I think what you're seeing with Bitcoin and crypto, but Bitcoin specifically right now, a challenger to central bank currency dominance, and central banks and governments don't give up their power without a fight. And I think, if you mentioned El Salvador, I mean, this poor little country, which is basically impoverished by the very policies of the IMF and the World Bank. 20% of El Salvadorians are in abject poverty, and they followed all of that World Bank and IMF policy that they were stuck with. And now they have the audacity as a legally elected democratic government to legally pass into their law that they want to have a fixed supply asset as a form of legal tender. And then you have the ECB, the EU, the State Department, the Fed, everyone, and every day there's somebody else saying that this is horrible and they can't do this. Well, they can, and they will, and they can't stop it. I think, as everyone has said, they'll try, because this is about power and something new. And it's a real tectonic shift, I think we're seeing.
Is there anything that you would like to add from your perspective there, Sascha?
Well, I think, again, it's really about, solving problems and solving, real life problems. And I think in this case, you see the remittances that especially into Africa. So people, have a need, because over there, the transfer fees are onerous, and the financial services over there are onerous, and the currency is not stable. So people are trying to solve that problem. And it just demonstrates yet another case that, cryptocurrencies can solve problems, So I'm really elated about that.
And I mean, Dan, since you're in the space of making things scarce digitally, what can you add to the discussion?
So I'm not sure I agree with that. We just gave out a couple 100,000 free Space Jam NFTs. I wouldn't call those scarce. But in my previous role, I led the protocols group at Consensys, so we worked a lot with CBDCs, central banks, won a few projects, implemented a few systems, and I have no view on the impact of CBDCs. It's not my area of expertise, but what I can say from an industry perspective, I think it's hugely beneficial when enterprises and governments invest in the space. New technologies almost never come to mass adoption without sort of existing embedded economic interest investing. Usually they're investing in a way that is not how the technology will be finally used. And I think we're seeing that life cycle here happen with crypto. A lot of the smartest people in the space came from traditional financial services, then started working inside those banks on advising CBDC projects or other enterprise use cases, and then went full tilt blockchain. And so just from that perspective, from improving the technology, bringing talent into the space, investing in the ecosystem, it's been great.
We saw that one of the big bumps of interest in our industry came with Tesla announcing that they would take Bitcoin payments. And I know we have mentioned them thoroughly through this call, so I don't want to stuck on who it was that drove this, but I'm very interested. What else do you think people can do? Everyday people with small businesses, with big businesses, even governments. What can we do to further the adoption of these technologies, of these types of new types of money from an everyday perspective, apart from accepting crypto payments? That will go to Jason, of course.
Yeah, I mean, I relate crypto payments, the acceptance of crypto as a form of payment, to the same days of the 1950s when credit cards came out. You know, there's an adoption period. There's a comfort and understanding and knowledge that has to get throughout the community, right? And we're, Stephen mentioned earlier, we're at the beginning stages of the crypto space, right? You know, I was a part of a group in 1993 called the WSN, the World Shopping Network. We had digital payments, we had vision, we had creative, we had the ability to buy and sell online. There was no compression at the time. I mean, there was no technology innovation that was happening at the time, to the point that in the late 90s, PayPal finally came out with, you know, ideas and concepts based on some of the initial foundations of eCash, which was the very first foundation around creating that digital payment. And how long did it take PayPal to get its 340 million users? A long time. There was trust, confidence, understanding, and education. The same way as in 2000, most people didn't use their credit card online. Why? Because they didn't feel that it was safe. They didn't have confidence. They didn't have comfort. Today in the crypto space, more and more, I get 30,000 plus new signups every month from people wanting to accept crypto, but their customers don't have crypto yet to make the payment, right? So I have, say, 900,000, 1 million people who all want to accept crypto. They don't have a client that has crypto yet. The same way as in the early days of credit cards, the merchant had Visa or MasterCard on the door, but guess what? The person walking through the door didn't have a Visa card or MasterCard yet. We're in that stage. We're in this early phase of adoption that as merchants put up their sign saying, hey, we accept crypto here, the person on the other end will learn about it, they'll educate themselves, and it's our responsibility as a group, you know, as a people in this space, to provide that education, provide confidence, provide the support to enable them with innovation technology, make it easier to accept that crypto as a form of payment and to make that payment with crypto. So, you know, we're so small, we're tiny in the space of adoption, but so was in the 50s and the 80s and the 90s where credit cards were. It's today we're moving and it's moving so fast, far faster than credit cards ever did. But, you know, that's in the days of today. We're in a digital change and everything changes every day faster than it never did before.
I mean, as we get closer to finishing this panel, one of the things that I get from what you mentioned is that also the user interfaces need to get a lot easier to use, and a lot of people need to get easier access to these tools, because I think it was in the podcast I did with you, Jason, that we were laughing about how someone at our office sent a crypto payment to the wrong address. And it was like, guys, we're a crypto firm, we cannot have these things happening, but it still happens. So what can we do from the perspective of having easier to use interfaces? What should we look forward to get as many people on board as we can? I don't know, Stephen.
Well, I think you're just going to see more and more money thrown into space and more engineering. I mean, like, I think at Bittrex and at other crypto companies, probably the engineers are probably the most understaffed department. And that's the biggest, I think, constraint to building a lot of this, which the same thing happened in the 90s with the internet, and the technology will get better. So that stuff, just money and time will solve it. I think going back to what you were just mentioning, like you've got PayPal, Venmo, everyone's starting to take crypto for payment. So it's just going to go more mainstream. But that's in the developed world. I think if you look in the developing world, in places like Nigeria, they blow away adoption rates. I mean, they've got like 70% or 80% crypto adoption. And, you know, we talked about central banks, you know, fine, they're still the least bad ones like the US or the ECB, but the Nigerian central bank is terrible. That currency was like the Venezuelan currency. So they don't really want to they don't trust the banking system. Most of them don't have access to it. So same with El Salvador, or they get ripped off in all these remittances from Western Union. So these countries, this is really solving a problem now. They don't need to wait. They're just adopting it because it is way better than what they have, which is often nothing or it's criminal. So this is solving a problem. I think real world, it's like, I agree with the whole credit card analogy. It's going to happen, but the digital system works okay. There's no super need to jump into this. It'll just happen over time.
And just to echo that, I live in Argentina, and me and a lot of my friends, we don't trust the banking system and we just don't use it. We either use crypto or cash. And that's already happening in many parts of the world. Anything that you would like to add from the user interfaces, user experiences point of view, Sascha?
Yeah, I think, obviously something we need to do as an industry, and, like a Coinbase, for instance, is clearly focused on that, is to improve usability, to connect the dots, just, lowering the accessibility bar, if you will, educating. I think that's key. But again, I think blockchain crypto is a vast space of innovation, and no central organization or powerful company is in position to really steal that innovation. And that's a really positive. When you look at the internet, what the internet became, just because it unleashed so much creative power. I see this I see the blockchain space at least at the same level, and perhaps even beyond that. So let's do the plumbing right. Let's do our homework. Connect the dots, make it ever easier, educate the people, give them access to the ecosystem, and the rest will fall into place.
Dan, something to add in there?
Yeah, I mean, two things. So first, the example of sending your money to the wrong address, that's something in traditional banking that, depending on your bank, the bank would either help prevent or refund that and make sure you call back. Yes, it's not every bank, not every transaction. That is a value add that banks provide in the traditional financial services. I think there's sometimes a motto in blockchain that sort of banks will disappear if in the blockchain world. And I don't think that's true. I think there's still lots of services like fraud prevention or payment refunds or things like that banks and credit card companies and so forth provide that we still need to figure out the blockchain native analogs for. And I think those will come in tandem with interfaces that make things a lot easier because they sort of enable you to work with parties that can help provide solutions. The engineering resources being constrained is everyone's biggest problem. For sure, and it's interesting to see what will solve that problem. I think blockchain has a somewhat novel situation where most of the engineers have been in the space for more than 3 years and made enough to retire, and so we constantly need new new people coming in to try to keep it flourishing. The other thing I wanted to say on payments and going back, I think the case study of Axie Infinity is absolutely fascinating, and I'm not the biggest expert on it. It's an NFT play to earn game that has basically skyrocketed in usage and value, and to a certain degree, it's taken the Philippines by storm. And in the Philippines, there are communities now basically playing this game for their job and earning the crypto assets associated with that. And then they have crypto assets natively that they want to spend, and you're starting more economies form around that. And I think that speaks to what Jason, Steve, and Sascha were saying, is the payment rails take time and adoption and all that.
And
it's exciting to see.
Dan, I support you on that too. The interesting thing is the Philippines, for example, 18 years ago, and they still do today, they use telephone banking, telephone payments, telephone credits. Most of their money is on the exchange between telephones. And 18 years ago, they were dumb phones. They weren't smartphones. They didn't have apps. It was based on the money that was being issued from the actual telephone company, right? The same thing is in a lot of the African markets. Digital payments in certain markets have far surpassed digital payments in other markets because of that adoption, right? A lot of the guys in the Philippines used to carry around 3 telephones because their telephone system would be, hey, I can transfer money between my family and my cousin up in the other city but they were on that specific telephone network. So I couldn't transfer money over certain telephone networks. But you see the adoption, Philippines is one of the areas that's going to adopt immediately. There's no like, oh, will it adopt? It will happen immediately.
Actually, to add to your point, Dan, I saw Axie Infinity in the news yesterday here in Argentina. Like, and I'm not talking on Google News, I'm talking like the regular news on TV. So it does seem like these that some countries are advancing on the adoption of these things faster than others, and it really drives across the hope of developing nations catching up with the more developed ones thanks to adopting technology faster. Guys, I really had a lot of fun talking to you today. We went through a lot of questions from the audience, some from myself, other things just popped up here. Is there anything else that you'd like to add to this discussion, or any point that you feel like you wanted to make and you didn't have the time to do so? I'm gonna take the silence as a no. And so we're just gonna go through the next, through the last question from Reddit. This was something that the Reddit community really insisted that I ask you guys. So I'm once again gonna go, well, I'm gonna change the direction here. I'm gonna start with Stephen here. Stephen, what is your favorite dinosaur?
My favorite dinosaur. Well, of course, the Bittrex, the T-Rex. That's our logo, right? So
All right.
Bittrex, get it? That's my favorite dinosaur.
This is for the guys on Reddit. Jason, your favorite dinosaur?
Well, I mean, I have to go with Steven on the T-Rex as well. I mean, dominate, right? So I guess that's was always my favorite when I was growing up, and it's just what it is. It's also my son, so I have to stick with that.
Okay, so we have T-Rex man, Sascha.
Frankly, I'm terribly weak in biology. Can I choose a croc?
Of course, go ahead. Okay, Dan?
Yeah, I just Googled types of dinosaurs, so I wouldn't embarrass myself here. I'm not, I don't know. Let's go with T-Rex. That seems like a popular choice.
Okay, I'm an Stegosaurus man just to balance. Yeah, the scale over here.
They're the big ones. They're the big ones that were vegetarian, right? Those are awesome too.
Yeah, the ones with the long neck. Okay,
yeah, that's great. All right.
Well, guys, this was the first edition of the Crypto Hot Seat. Give it up. Thank you very much. I hope you all had fun being here. I hope the audience had fun watching this at home. And well, we'll see you hopefully on the podcast or on another edition. Thank you very much.
Thanks very much for having us.
Thanks, guys.
Pleasure.
Thanks.